Welcome to my YouTube channel. This is 8th April 2026 and this series is specifically focused on my option selling, which I am doing every day. And the purpose of this is I can review my daily trades, and I will also able to let you know what are the things I have gone through the day. And I follow bar by bar. Each bar I take into consider each and bar and try to study their behavior patterns in respect to the previous bar, and I will try to judge in which direction the price is trying to move. And each and every bar tells us a story, and because with that information we will try to understand how the price movement is going to be. We will try to judge it, and I will share all my contract notes and all my trades which I have done in this day. So stay tuned. And these are the full rules I follow. I just take one time frame into consideration, that is 5-minute time frame. I only focus on price action, no indicators, no external tools, nothing else. And I study previous candles, means I study each and every candle in detail, means I keep focus on the candles and observe what are the current price behavior in correlation to the previous candles. And this is my risk and reward ratio. I always try to maintain this reward. If I am going I maintain 1:3 or 1:4 ratio. Sometimes this is a very strict stop loss, but I have tried to understand, means depend on the market scenario. I try to risk only 10 to 15 rupees, and my reward should be 35 rupees or more than that, or 80 rupees, or depending on the market condition. I allow my reward to grow. I try to understand, this is my rule number 5. I try to understand the buying and selling pressure. What are the bulls doing and what are the bears doing? Bulls try to take the market up, price movement up, and bears try to take the price down. And in this way they will generate a particular direction. Sometimes there will be no direction, but eventually we'll come to know about which direction the price can move. So, and this is my rule that I take into consideration. Trade selection, I try to avoid bad trades, means low probability trades. I will let you know in from this chart that what I don't do and what I do. I completely avoid counter trends, means as you can see that if this is a good move, this is a breakout about this bar, I completely try to avoid this counter trend. Same moment, if this is a big move, I completely try to avoid this counter trend. So I will come to later on let you know what are my views on this today. I completely try to avoid the assumption on breakout. Yes, first I used to assume breakouts on upside, and I have lost many rupees, many losses I have done. But now I always wait for a confirmation, and my focus is always on the second leg after the breakout. So I will let you know what are my from this chart. Okay, I pay close attention to the price behavior, previous highs and previous low. This is my entry and exit rule. I only enter once the signal bar has been formed. If once the signal bar is formed, I will, if I want to go long, I will once the high of the signal bar get hits, then and then I go long, means I sell PE. And if I want to go short, then once the signal bar low is hit, I will sell my call. And this is my approach. So let's go directly to today's chart. Now as you can see, as you know that this was a big gap up today, so we don't consider anything gap up and what will happen, because we are studying each and bar bar by bar. So okay, so as you can see that first was a bull bar having tails on above and below, and you can see in the second bar there is a big tail and a red bear bar, but as it had gapped up, so now you can see that bar 3, the wick of the bar 3 has been below the bar 2, and there were buyers, they want to take the market up, and this bar 3 candle has been formed. So considering this, I took a trade considering that once the bar high of the bar get hit, I will get enter. So I will let you know what was the time. Okay, it was around this bar I got 9:30. So this is my contract note, and I shorted one PE. This, okay, I shorted one PE at 262.8 rupees. So I entered at this price, but yesterday was my a big loss, and due to which I have tightened my stop loss, and I didn't want to lose any of the money. But this was my first mistake of today, that my stop loss was too strict, and within 3 minutes I was stopped out eventually at 272, and the market just reversed by touching this my stop loss, and it went back. So this is the funny part of trading, and every day and every order is teaches you something or the other. So I got stopped out at here, but what should I have done? I should have waited for this candle to form, and once it hit below this, I should have got out, or I should have got out of this trade. But at this bar I got out, and as you can see that there was a big move above this, and eventually I could have gone at the break even, but I was worried. I didn't know that after bar 3, 4, 5, 6, 7 this should have formed. Okay, so now as you can see from, again let's try to understand this scenario. Bar 7 and bar 8, where the high of means the prices went above the high of one bar. So potentially there were sellers who want to drag the price down. So you can say that this is failed breakout, but considering this as a move, you should never try to enter thinking that this is you could you want to reverse the price and sell call at below this, because for me this is a counter trend, and even if I want to go for a downside, first there should be a breakout below 3 or below 1, and it should have a pullback, and on that pullback I will try to enter it. So I just waited, and bar 8, bar 9 was formed. As you can see that bar 11, you can see that there was a big rejection from the bulls, and bears tried to control this, and eventually sometimes this happens, and this happens when the institutions or other FIIs, they want to trap the traders out of this trade, and thinking that below this there will be a good move downside and people will sell or go short below this trade. But this is a trap, which I have come to know later that this thing happens. So we should never enter below this bar 11 thinking that the price will go down. Okay, we should wait for a good breakout to happen, means it should go below bar 3, bar 1, and then we should look for a pullback, and then we should enter. So as you can see that bar 12 was formed, and bar 13. Now let's study this bar 13. There were bulls below bar 12, and there were eventually bulls below bar 11, those who have taken the trades and they wanted to take the market upside, and bar 13 is above bar 3. It means that those bulls who have bought over this are defending this position. They don't want the price to go below bar 3. Okay, so bar 13, as you can see, it is a bullish engulfing, and at this point I have taken a trade on this 14 bar, and I didn't repeat my mistake which I did over here. I didn't make the mistake over here, and I got filled on this 14 bar. Let me show you what was the time. So this is around 10:20. So this is my 10:20 and I shorted one PE. Okay, I shorted at 247. Okay, 247 rupees I shorted P. And let's take this order. Let's try to understand what the mistake I have done. Okay, at 247 I sold it, and this two bar were formed, and eventually I placed my stop loss. Means I was going to exit my trade if on this on bar 15 if it would have gone below 14, but luckily both were defended by the bears and I was in my profit. Now see what happens is, then I place my order, then I place my stop loss below 10 rupees and it was okay for me. And after bar 16 and 17 was formed, and I got little worried, and what happened, I placed my stop loss at break even. This happens a lot of time, and I got exited at 245.95. It was just, I will show you the time, it is 10:41. Okay, so on this bar means below this, around the low of this, I got out at break even. I thought that the price will move down, but that it didn't happen, and I completely missed this whole move. So putting a very strict stop loss, or sometimes because of the fear, yesterday I have occurred a loss, so I was totally, I don't want to lose a single penny. So this happened and I got stop loss, and once this happened, you are not in a position to re-enter the trade, and I missed this. This was around 50 rupees, so I could have got a good amount of money, but okay, that didn't happen. So now you can see that this, now let's try to understand what has happened over here. You can see that bar 20 has done a breakout above bar 8. So after that there is 21, 22, and we should never try to enter in the running market like 21 and 22, because many times it happens that it goes into a deep pullback. And so my system says that once let the let the market move to a point, and we will enter on a pullback. So after that, let's understand this cluster. Okay, bar 22, 23, 24, 25, 26. As you can see that there is a lot of wick above it, and these are the people, those bulls who have tried to those who have entered at this place, buying call or selling put. Those are the traders, they have taken their profit or something like that, and new sellers, aggressive sellers might have entered at this position, and this should occur. For me, this is a counter trend. So even if you see this type of thing, you should never try to enter for this move. Means for me, this is a counter trend. You can go short below this 26, below this 25, below 24 for a small move, but in general you should completely avoid this thing. Okay, for me now this is my first leg, and I am looking for a pullback. Now you can see that this is first leg, and this is the second leg pullback, and these are two deep pullback to make the market move up. So and this could be first push, second push and the third push, and market has this is an ABC correction actually, 3 push, and this scenario. Okay, so after these 2 moves, for me this was a double top, and from my previous experience I come to know that most of the time around 12 to what do you say, after 11 to this one, the market goes into a trading range scenario. So I sold a call at around this point, at the top of the bar 39. I was thinking that this was a double top and market would eventually test this moving average, and I took a trade at around, I'll show you, at 12:25. So at 12:25 I short one call of 2300 900, and I shorted at 254.3, but at 12:30, when the market was moving down at this position, around this area, I got out of my profit, which I shouldn't have done it. I should have run this market. I should have waited for this low to be tested. Now you can see that there are 3 pushes, first, second, 3 push down, and you can see this is the pullback, and this is first leg, second leg, and a third leg pullback. And you should never try to enter above this, even if it looks good for a pullback. You should wait for some sideways direction, or because many times it happens that the market goes into a sideways direction and it eventually trapped many bulls or trap many traders. But sometimes this is market, we don't know what's going to happen, so we have to wait for our perfect setup to happen. And as you can see that this is the first leg, or you can say that this is the first leg, this is the second leg, and this is the third leg. And in this leg, you can say that bears have tried to gain control, and they wanted to move the price down, but there were many buyers below this, and you can see that this is a completely, this point has been tested at this point, and there was a pullback, and this was the follow through of this pullback. Okay, so after this thing, I have not traded anything. And lastly, at this point I will tell you at this position around bar 15, this is at 14:20. At okay, sorry. Okay, so I took a trade at 145, that is around this point, at 145. I sold one call at around 265 rupees, and I was thinking this, so I have sold one call around this position, which I shouldn't have done it, but the bar was too big, so I took a trade and then I entered shorting a call, and I got it at break even. As you can see that at 265 rupees I took the call, and at 264 at break even I got out of this call, because after this bar, after this red bar, I was thinking that 100% the price will go down, but that didn't happen, and as you can see that bar 61 and 62 has formed. Now this is also one interesting thing to notice, that this is an bullish engulf, bearish engulfing, where bears try to control, want to take control, but was immediately rejected, because the buyers were so aggressive that they didn't want the price to hit below 60, and they took charge, and 61 and 62 were formed. And around this, once this formed, I was completely convinced that the price will not go below that, and my target was that the price should have moved up. So on this bar, I think on bar 63, bar 62 I sold one PE. I'll just let you know at 1420. Okay, so 1421 I sold one PE at around 267.35 rupees. This is a strike price, 241.10. So this was the bar, and as you know that my target is not about 35 rupees, 40 rupees, my target is more than that. And eventually I was thinking that the price should have broke above this high, and it should go up, but that didn't happen. And around break even, at around break even 266 rupees I got out of this trade, and I'll let you know what the time is. It is 1450, that means around below this bar, around this I got out of my trade at break even. And even if I would have hold it, I was thinking that price might go up, but as you can see that bar 70 might have hit the stop loss of many of the traders, and my stop loss also might have hit. After that there was no such great movement, and so this was my day. So if you can review my trade, this was my trade where I got out at strict stop loss. This was also I got out at strict stop loss. Here I got out at break even. At this point also I have got out at break even. So as you can see that from my contract note, I didn't make much money. So my total was around 552 rupees. Not a good, it was okay. The important thing was I followed my rules and didn't allow my FOMO to take control. And so this was my day. See you in my next video. If you want to drop any comment,